good. Yeah. Alrighty. So this is gonna be we're gonna be talking about Coinbase today, on how I was able to call while everybody was super bullish on crypto last year, how I was able to be on the defensive side while everybody was on the offensive side back in specifically August. I tweeted out here. I said back in August 16th, I said don't be exit liquidity, Coinbase high time frame, connect the dots. So while everybody was super bullish, I was playing it very safe because on the high time frame, it was super bearish. But as you can see here on the low time frame, there were so many tweets on X, Instagram, every single social media platform you could think of. Everybody was saying bullish on alts, bullish on everything. But if you trade correctly, if you traded this whole cycle correctly, you would have known that it was actually a basically you getting finessed, right? So let's talk about it. Alrighty, so going back to, let's delete this. We can just start all over. Okay, so we were talking about back in March of 2024. Market makers were making higher lows for higher highs. Fuller range, top to bottom. This is your first deviation right here. Market makers perfectly deviated the DL tool. Boom, bring it up. Now we see this little accumulation thing. This is our second tap. So this, you could have even said that this was some type of accumulation, but we had demand down here. So market makers still wanted to accumulate that demand. So as you can see, in the internal, market makers make lower high for lower low, pull range top, bottom to top, first deviation, second deviation, pull range down here. As you can see, this is a perfect distribution with the wicks to go back lower here. Now you'll put your range bottom to top. Zoom in right here. This is very important. The fact that market makers, this is your first deviation, this is your second deviation, perfectly touching that DL tool. This is exactly what you want, bro. Second deviation, pull down right here. So now this is your real PO3 first tap, second tap. There was some demand right here. Market makers grab this, so now this is your third tap. Boom. Could have made a crazy RR off of that. Market makers pulled it up, and then now that was going to be the start of actually the second deviation on the even higher time frame, right? On the highest time frame. So let's delete those. Market makers put, remember, higher lows, higher high on the highest time frame. Range top to bottom. This is technically your first tap right here. Wait. All right, so this is your first tap. You see right here, market makers perfectly wicked this. So now you're gonna pull this down here. So this is your first deviation right here. This is your first deviation. But now, as we can see, this is the DL tool. Market makers perfectly wicked this this DL tool right here. So now this is your perfect second deviation. But if we look even closer in this range back in November of 2024, let's get deep in here. Market makers, even on the mid time frame, was also making a distribution model as well. Let's do the work. Higher low, higher high, pull range from top to bottom. Market makers are wicking, as you can see. Every single tap was a wick, so you know it's super high probability. This is your first tap. Second tap. This is your third tap. Boom. So on top of the high time frame short idea, on the mid time frame, they're also looking to short, right? Which is crazy. So boom, obviously confirmed. Your entry would have been somewhere around here on the break of structure confirmations. Your TP range would have been down here, and you would have made a nice estimate 5RR, right? Crazy. Even this is some type of even lower accumulation, but we won't look too deep into there. Now, as we can see right here, market maker shorted. They completed the range. this is some type of accumulation right here. But the reason why market makers accumulated after finishing the range was to yet again create another mid time frame distribution. Lower high, lower low. Pull your range from from bottom to top. Let's do the work. Let's delete this. Okay. So from top, touches down here, touches equilibrium. Market makers deviated, so we pull the range down here now. Look at this. On the low time frame, this is some type of short already. This is some type of short. Market makers perfectly shorted the second deviation here on the mid time frame, because remember, this is your first deviation. Second deviation, market makers respected this DL tool. What did we say about that? Full put your positions. First deviation, second deviation. This is your third deviation right here. Market makers, your short would have been, or your TP range is right here. Your stop loss would be below the third tap. Yet again, another 5-hour. But we got crazy continuation because there was no demand holding price at all, right? We had market makers come back a little up to grab this this supply up here, because market makers did make some miniature supply. But as we can see, if you are still in the position, in my opinion, this is what I would have did, right? If we did enter on this is my entry. Market makers came back, wicked it, but you wouldn't have gotten stopped out yet. What I would have did, right? Because I'm still in the trade. After it rejected off of there, that's actually even more bullish confirmations for me, where I'm like, okay, this is for sure bearish. Market makers wouldn't come back up unless it would have totally invalidated the trade. So now I would have put my stop loss actually at break even, where now I'm risking nothing on the trade for all to gain. You can even argue that maybe you would even add risk just because we knew that on the mid time frame, market makers were already trying to short in the first place. So, and like I said before, this is just all liquidity right here. There we go. This is just all liquidity, right? We have no demand that it could have bounced off of at all. So this was just going to be a straight dump. Do I have the, yes, I can. Okay, perfect. We can even now show the vol tool. Yeah, beautiful P shape right here. As we can see, market makers, this is market maker volume. Only market makers, because they are filling so many positions, literally thousands to hundreds of thousands of volume and orders, they're able to show that this is them doing shorts. And it would make sense that we see that this is their this is basically their footprints here. This is all market makers. Now, what we also said is that was a range inefficiency and they love filling gaps. This is basically the gap right here. Market makers love filling gaps. So that's just like a +2 confluence. Makes the trade even more high probable, right? Alright, so I don't want to spend too much time on that though. Boom. Finish that. Market makers, this is your first tap, this second tap. You would argue that this is your third tap, so it came down, finished the range all the way down here. Would I have caught that? I'm not sure, to be honest. I don't really know. Alright, so now let's go back to the high time frame, because this is really where shit gets crazy. This is your first deviation. We talked about how this was your second deviation, and market makers made that distribution to go all the way back down, right? You're going to pull your range now to the second deviation. And now, would you look at that? Zoom in. 2025, market makers came back up. This was some type of accumulation. I wouldn't have traded it though. It's not that clean to me. Boom. We come up higher lows for higher highs. Market makers yet again perfectly played this distribution, this distribution in the DL tool again, right? What do we say about that? Grab your parents' credit card, full port that shit. Literally generational wealth could have been made. Boom. We come in, they're playing this range right here in this DL tool. Super high probable. This confirms it, makes this my third deviation, right? For the high time frame short. This was in July of 2025. When I saw this, bro, that's when I knew, get the fuck out of alts. Everybody was so bullish at this time because this is going into the summer. Everybody's just getting out of school, right? All those people are going into summer break. Everybody is now going into vacation. People have bread, so now people are wanting to spend the bread. Markets for crypto and everything was at basically new all-time highs. This is perfect manipulation for market makers to absolutely dump on retail, right? If you look at the markets at at the correct lens, you know what I'm saying, you'll be able to profit every single time. This was basically somewhere around here would have been the breaker structure, and as you can see, if you played that, I wasn't able to play it because I seen it at already at that time in July. The only problem was on brokers like, you know, Robinhood, Webull, any trading platform that I was trying to fill my positions, it was all already oversold. All the market makers already oversold. They already bought all into those positions up until like it was 2026 of this year. I was even trying to short it. It was all bought out. But if you had the capital and you were able to eat those fees and stuff, dude, you could have made so much money. So much money. Anyways, comes down. Now it was around here where I tweeted again because when it came down, everybody was still saying you're gonna buy this because this is the higher low for the higher high, right? That's what everybody was saying, especially because traders were also looking at this accumulation. However, what I was trying to tell other people right back in my tweet was you needed to connect the dots on the high time frame. It was already confirmed that we were going to be shorting, right? Nobody was looking at that. So let's get in here. August, right? Okay. Check out this range. So, market makers came down. They confirmed the short. Everybody made hella bread off that. There's a gap in price, so you know at some point market makers love filling gaps. So at some point they're gonna come back for that gap. I already knew this, but I already knew market makers are making this accumulation. They see the gap. As retail, they're thinking, okay, market makers are making an accumulation. There's a gap. Market makers are gonna fill that gap. They're gonna make a higher low for a higher high, and then it's just gonna go up to new all-time highs. That's when alts is gonna go crazy. What had happened instead? Market makers rejected off of the supply up here to reshort to go down. Pull range, higher, lower high for lower low. Oh, mind you, this right here, why this was so strong? Because this was a short on the low time frame, and this, I'm not going to go into it, this was a short on the low time frame, which is why you had such an aggressive move down. There was no demand besides all the way down here, which is why now market makers were accumulating. This was the only demand that they had. Boom. Right? Okay. Now let's talk about the accumulation. Lower high for lower low. There's a huge gap. Now you pull range from bottom to top. This is your first deviation. Market makers wicked the DL tool. So now you know this is your second deviation right here. Now you know that market makers came back up, touch equilibrium again. You see that market makers, even on the mid time frame, made some type of like another accumulation right here. While on the mid time frame making another accumulation, this is the third deviation. You would have took your longs breaker structure right there if it was clean. TP range right here on the top. Crazy SRR. Okay. So it comes up. Now, technically mid time frame, yes, it's accumulative up. But if we pull this range and we extend it, would you look at this? This right here, from this deviation to this deviation, it's clean as well. So market makers, yes, they accumulated, but really now the idea is, since there is supply up here, market makers can actually look to accumulate just to short on the higher time frame, which is exactly what had happened, right? You pull range now to this deviation, boom. Now Market makers pass, boom, boom, boom. They managed to grab some type of low time frame demand down here, comes back up. Now, if you check right here, market makers came up, they moved past the DL, but the fact that they rejected off of the supply to come back down, wicked right here, this is very important. Wicked the DL tool off of this low time frame demand, came back up. You would have considered this whole price action right here PO3, right? Boom. This would have been a PO3. Oh wow, I even pointed out the perfect breaker structure. Yeah, here, let's see this. So boom, off of the supply, this would have been your third tap. Let's see how crazy this would have been. Oh my gosh, 5RR, insane. And then yep, I already drew this out. Technically there was nothing but liquidity below, as you can see, just a nice curvature shave up, which is why it dumped so much. Let's pull also the volume tool from first of the accumulation all the way to the breaker structure. Boom. This isn't or it's considered P shape, but it's not A1 quality because it didn't fill, right? Or the inefficiency is up here versus down here, but it's still valid because this is considered P shape volume. Most of the volume happened down here. The inefficiency was to come up to distribute off of the demand to go back down. So it still makes sense in that aspect. Okay. Now, as we can see, all right, mid time frame is shorts. Now comes down. As we can see, while market makers are shorting, market makers even thought, yeah, let's just add more position. Let's just add more fuel to the fire. Let's distribute even more. So boom, pull your range bottom to top. You pull your range now to this deviation. Look how beautiful this is. What do we say about this? Go to JP Morgan, ask for the biggest loan you can get, the way that it just respects DL tool right here. First deviation, second deviation, you're pulling this now to the top of here because it's your second deviation. Now created a model 2 distribution. Your short would have been right here. Technically, if I was in the short from all the way down here, from all the way up here, and TP target was right here, what I would have did, if I seen that market makers are re-shorting as well, I would have pulled after this got confirmed. I would have moved my stop loss to break even, and I would even actually look to add to my position that's already break even to make even more profit off of it, because it's such high probability. Because even technically right here, there was no demand that market makers could have rejected or bounced off of either. This is just all liquidity as well. On top of this being liquidity, which is why it dumps so fucking much. Yeah, October of 2025. Crazy. Voltu, kind of decent. Not as clean as when it showed up here. All right. Comes down. So we have the high time frame distribution with the mid time distribution. Added fuel to the fire. TP targets hit. Boom. Comes down. Absolutely shits to the floor. All right. Boom. Now we're coming in. This is going into November of 2025. This is when news was starting to get a little, shaky with the Middle East, Iran, Israel, blah, blah, blah. You already know. As this is happening, market makers retail was still anticipating, because that there's all of this liquidity that market makers leaving above, we can still look for some type of movement back up. They were looking at this. However, lower lie for lower low, pull your range from top to bottom. Market makers touch equilibrium right here, and there's some type of demand, so it was clean. Pull your range to now this right here. This is your first deviation. This is your second deviation. This is your third deviation right here. Made another model 2. Nothing but liquidity above. What do we say about how market makers are respecting the range with this line above? That's kind of like slanting going up. Bro, oh my gosh. Literally get a loan. Like, literally, Larry Fink called me and said, bro, short that shit. Like, that's literally what he's telling you, bro. Larry Fink himself is telling you to short that shit. That is literally him on the buttons. Boom. Comes down. Could have shorted. Your entry would have been somewhere around here on the breaker structure. Right there. And yeah, you just, oh my gosh, bro. Anyways. Okay. So it comes down. Re-shorts again. But, okay. All right. Let me. I'm pausing because I just want to. I'm pausing because I want to make. I'm just trying to think about if I should say this or not. All I'm gonna say, if you watched the last video on how oil Q1 of this year dumped. Okay, all I'm gonna say is Q1. If you looked at last video, what did I say about Q1? What had happened, right? Oil accumulated, right? Okay. Now, if you just put 2 and 2 together with the same dates, if you look right here, market makers. Okay. Market makers make lower highs for lower lows. Pull range top to bottom, right? It's your first tap, second tap. That's crazy. Okay. I don't want to say too much because I value my life. Right? The fact that market makers, you know what I'm saying, respected, that's crazy. This is going to be your second tap. So that's your first deviation for the short. This is your first deviation for the short. This is your second deviation for the short. This is your third deviation for the short. This is supply that market makers obviously rejected off of right here. This is January of 2026. Your short would have been right here. Entry, this, but you could have taken it. Oh my gosh. Okay. That's crazy. Anyways. You know what I'm saying? If you have half a brain, just connect connect the dots. Just connect the dots. Okay? So it dumps, right? Very important range. Very important range. Okay? Now, what are we doing? Or actually, here, let's talk about Bitcoin. I'm not gonna go with the full Bitcoin because that's just like a whole nother video that I have to make. But basically, the same time in August when I called out that Coinbase was going to basically shit to the fucking floor, right? Back in August. I'll just briefly talk about it. August, same time. Market makers also for Bitcoin was making a short. It's your first tap, second tap. Look at this. 1, 2, 3. This is the accumulation, but market makers perfectly, right, respected the Yotel. So now this your boom. First, second, third. Back in August. This is your second deviation. Another reason that is like plus 20 confluence. Oh my gosh, you know what I'm saying? Alts are gonna bleed. So boom, comes back up at some point. This would have been your short. Even this is even a low time frame short in the short right here. Boom. Your short would have been right here. I'm not gonna drop it all the way down, but I mean, you can kind of see right here. Yeah, alright. Anyways. So yeah. In August, I was looking at the accumulation, see how they finesse retail, but if you look on Bitcoin, it was showing bearish signals from the jump. This is literally the topping signal. Crazy. That's just like plus 20 confluence. Okay, boom, you put that in your arsenal. Alright, interesting, right? So what do I think about current price action? Market makers finally filled the target, right? The main reason for this high time frame distribution was to come back down to those levels of 145, which is basically where it already touched. It tapped it basically twice already. Now we're here. We're basically at the floor. My expectation, right, comes down. This is your deviation, comes down. Pull range from bottom to top. Touches equilibrium right here. First deviation, second deviation, third deviation, which is why we're seeing it come all the way down here, TP range, right? However, could be because, and this is me trying to be bullish right now for alts, this is your first deviation for the accumulation. This little puny fucking thing back in April could be your second deviation for the accumulation. And basically, if I'm correct, it's already valid that this could be your third tap for the accumulation. For it to run basically back for new all-time highs. Will it do that? I have no idea, right? What I think is going to happen, if I'm correct, is it's not time yet because we still have this liquidity that I have marked out right here. We still have this liquidity, and then we also have this demand, right, that I kind of want to get taken out. I don't want to get into Bitcoin so much, but it's very important that we do just a little bit. Market makers right here in the low and the mid time frame, they made some type of short. So my expectations for Bitcoin is to make a lower high for lower low to accumulate even more of this demand, because this is heavy ass demand right here, right? Back in 2024 that market makers can still go for. This is your first tap, this is your second tap. If I'm correct, if market makers come back down, because this is technically a short on the mid time frame, it comes down, comes back for this accumulation to come back up. If this happens on Coinbase, it would make a lot of sense as well that market makers, because if we can see right here, market makers are leaving a bunch of liquidity, right? This is technically just all liquidity that market makers is leading up. What I can see happening, if what I think is going to happen plays out on Bitcoin, where it comes down, makes the last third tap for the high time frame to come back up, Coinbase is going to reflect the same way, makes a nice liquidity trail going down, comes back up. Obviously on clean breaker structures, grabs this liquidity right here on 116. Same thing with Bitcoin, does the same thing, comes up. I mean, I'm looking at new all-time highs, to be honest. We do have supply right here, that here on Bitcoin, that here at the 90K, which makes sense psychologically as well, right? That market makers could still 100%. Actually, I don't want to talk about Bitcoin so much because, you know what I'm saying, we're going to be talking about it forever. It's a whole new video. Yes, it can come up, and yes, it'll be nice that it makes new all-time highs, or finesse retail. Yes, it comes back up, makes the relief. Oh my gosh, Bitcoin's going to run it back, but it's literally just because it would actually perfectly touch this DL tool, because, right, what do we say? There's supply up here. Market makers could literally just finesse retail. literally dumps to the floor, and then that's actually the whole cycle, right? It's a lot of scenarios, I could play out, right? A lot of scenarios. All we can do right now is be patient. Just clutch your position right now. There's no confirmations on any longs for, in my opinion, any alts. I've looked at literally hundreds of pairs of alts. None of them look as good. I am looking at there's like 2 to 3 that I am watching for right now that look good, but without your high time frame majors like Coinbase, Bitcoin, Ethereum, you know, Bitcoin dominance, USD Dom, like if those aren't looking bullish or correlating with the other majors, it's probably not going to be a good reason for anybody to get into alts or in general, just crypto, like the whole crypto thing. It doesn't make sense right now. Yeah. Another thing that I can add, actually, I don't even want to say that. I'm gonna play it safe. I'm playing it safe. I already said a lot. Just yeah, I don't want to say that. Never mind. Definitely though, study this. Where is that? Where are you? Yeah, this right here. Just study this. Study the oil video and then study this range.